Hello, everyone. I hope you're doing well. Although, if you're a working class person in Australia who doesn't own a bunch of real estate investments or have a stock portfolio, you're probably not doing so great at the moment. And I've been making videos for years talking about how the government is responsible for creating inflation. The Reserve Bank of Australia deliberately creates inflation, and they should never have slashed interest rates to near zero during the pandemic. They didn't, or print the $500 billion, all the money they slushed into the banking and government debt markets, and they didn't raise rates fast enough or high enough, and they never should have started cutting rates. And if you've been watching my content for a couple of years, you know I've made endless videos about that, trying to point that out. And in this video, if you are just watching the YouTube short, please come across to watch the 5 or 10 minute version. Hopefully I don't go longer than 10 minutes, but I wanted to make the point in this video, and I'll show some data over the next 10 minutes or so, that we have unemployment at a record low, real estate prices skyrocketing way faster than inflation at record highs, household debt record highs. If interest rates were high, we wouldn't have record levels of debt. Government debt record highs, stock market record high, rents skyrocketing, record highs. Everyone agrees it's unaffordable. This is not an indication that inflation is solved and that interest rates should be cut. That's an indication that inflation is running red hot when you've got record high debt levels and real estate prices, etc., etc. Everyone knows we're in a cost of living crisis. So anyway, we've got inflation numbers today. They were worse than expected, slightly hotter. Worse than expected. RBA rate hike on the table. They should be having emergency meetings right now to raise interest rates 1, 2, 3%. And of course, they won't. And the biggest contributor was housing. We'll talk about that in a sec. Headline inflation remained 3.8%. Keep in mind, this is the government's own doctored numbers. And, if the government is giving you a subsidy, to cover your rent or something like that, they only count the final cost you pay in the CPI. So CPI is different to inflation. I've made other videos about that. CPI is the final cost you pay after the government accumulates trillions of dollars of debt and gives you a subsidy. Inflation, in my opinion, would be the actual price of the thing. Inflation is higher than 3.8%, but let's take the government's own number. I've talked about where this goes. This is the Australian Bureau of Statistics website. Now, would it be fair to say that for working class people, their biggest expense is housing? It's either their rent or their mortgage. That's the biggest expense for most regular people. Housing up 6.8%. So the government has been working hard on housing affordability. I don't know why anyone thinks that the government is a way to solve problems, but they've been working on housing affordability, working on building more houses, and the net result is that they've built fewer houses, and rents and home prices are rising by 2 to 3 times the overall rate of inflation. That's what happens when you hire government to do something. They are horribly ineffective, and the more you vote for politicians, the more you vote for taxes, they will just keep stuffing things up and making it worse and worse and worse, and you'll keep voting for more of it until you figure out that the government is never the solution. Now, unemployment remains at 4.1%, which is actually very low. It's near a 50-year low, and most economists say it suggests the economy is still operating close to capacity. It's not possible to have every single person employed all the time in any country. So for unemployment to be that low is a sign that unemployment is not a problem relative to where it would be historically. So again, shouldn't be cutting interest rates. There's no need to cut interest rates. We've got as many jobs as we could possibly have, of course, fueled by government debt, state government debt accumulation. But again, housing prices. Here's a chart going back to, well, this goes back to the 80s, but let's start from the 2000s. This is the price for home relative to your income. Now, back in the day in the 80s and 90s, when the baby boomers were buying their houses, it was only 3 to 4 times income to buy a house. Yes, interest rates were higher, but the price of the home was much cheaper. Look at where Australia is today, 9.7 times income, way higher than New Zealand. Look at the USA. Homes in Australia relative to our incomes are double the price of homes in the USA, and there are many analysts who think that the American real estate market is in a bubble. Again, when home prices are at record highs, not just in terms of dollar cost, but in terms of relative to our incomes, that is not a time to be cutting interest rates when the biggest expense for working class people is their home or their rent. Look at global home prices. Let's have a look. This is from ABC News. You might say, John, why are you using ABC News? I don't want people to accuse me of being some greedy capitalist who only reads, and I'm not right wing, but I'm trying to get news from the government propaganda news station, so people can't question that I'm selectively pulling data. This is from ABC News. This is a chart they reported. And if a home cost $100, this is an index, so index to 100, and excuse me, it's making me so upset, I'm crying. In 1990, homes 100, now 600. We've seen 600% increase in home prices in Australia, more than all these other major nations. Again, that's not the time to be cutting interest rates. That's a sign that inflation is running out of control, that the biggest expense for working class families is dramatically rising in price, and you need interest rates to be higher. You need to stop these prices from going up. Advertise rents. Look at what happened in 2020 when they locked us. Now, through 2020 to 2022, I mean, the country was partially locked down and people weren't working. Why are rents skyrocketing if people are losing income and the economy is shrinking and the economy's half shut down? Again, this is because of the government, because of the RBA deliberately creating inflation and the government borrowing now trillions of dollars, hundreds of billions of dollars over that few year period and flushing that money into the economy. That causes the inflation. Look, you can see in 2020 when they slashed interest rates to zero and launched the big money printing, quote, money printing programs and government spending programs, rents skyrocketed. Not hard to figure out. Government creates inflation. This is a government created problem. Uh, don't turn to the government for solutions to this problem. And if I said earlier that, like housing, whether it's rent or mortgage, is the largest expense for many households. Look at this. 33%. So the average income required to service rent, to pay rent, 33% of your income. That's a record high. So when they're presenting the inflation data, I mean, rent is probably one of the most important things. I mean, that's what people are spending 33% of their income on average. And people in Sydney and Melbourne who are on lower, or maybe not Melbourne, Sydney, Perth, Brisbane, and Adelaide, places like that, in capital cities, if you're working a regular job, you're working at Coles and Woolies, you're probably spending 55% of your income on rent, or you're having to share a place with two or three other people who you probably don't want to share the place with. So again, these prices going up is a sign that inflation was never solved. As I've been saying for years, the inflation problem was never solved. Go back and have a look through my old videos. You see how many times I said this. Household debt to incomes. This is a little bit old, but Australians have near record levels of household debt. Worse than, I think Switzerland, who's not on this chart, is slightly higher than us, but we lead the world. We're either first place or second place in terms of how much debt our households have. Again, if interest rates were high, you would not be able to take on this much debt. The fact that we're able to take on this much debt is a sign that interest rates have been too low for too long, right? Debt explosion. This is a chart that I created based on official government budget numbers showing the total amount of government debt. You could see in 2008 when we hit the financial crisis, the global financial crisis, total government debt in Australia was below $200 billion. Look where it is now, 1.6 trillion almost, on its way to 2,000 billion and beyond. Debt being accumulated at an exponential rate. This is, again, not a sign that it's time to cut interest rates. To stop governments borrowing money, you have to impose some discipline on them. If the RBA was acting responsibly, they would raise interest rates and tell governments, you need to cut spending. Inflation is a problem. You can't keep taking on debt, right? And then flushing that money into the economy, just sending it out there and diluting the dollars that are out there. Because keep in mind, some of this money that's being borrowed is money that, and this is a very complicated discussion, but some of it is money that's not necessarily out there in the economy now. The banking sector, the RBA could be creating this money, or this money could be coming from foreign investors. So it's money coming into the country. It's not being used to build a factory to make a product that we can see a return on later. It's being used by the government to create all these jobs, all these bureaucrats, and that's a topic for another video. We have the most bloated public sector of just about any nation on the planet. There's plenty of data to support that. It's not an emotional argument. Math, facts, data. And then, of course, here's our stock market over the last 5 years. Look where our stock market, and this isn't bad that the stock market's at a record high, but the fact that the stock market is at a record high, again, that's a sign of inflation. We don't now, there are other factors at play. Obviously, global markets have done well also. But again, this is not a sign that we need to cut interest rates and create more inflation and stimulate. So I would again say, why do we have a government agency, the Reserve Bank of Australia, .gov.au? It's a government agency, and they have a flexible inflation target which aims to keep consumer price inflation between 2 and 3%. So again, why do we have a government agency creating inflation deliberately by design when we're in a cost of living crisis? Why isn't, I mean, I'm a free market capitalist. I'm well, not even a capitalist. I'm a free market person. I believe in freedom. So I don't think there should be a government agency deliberately creating inflation. But to the extent that you believe that we need to have a government agency setting interest rates and creating inflation, why wouldn't we ask the RBA in a cost of living crisis to target negative 1% inflation? Tell the RBA you need to bring prices down in the economy, bring them down 1% a year. Why do we want to deliberately make these prices, the price of everything, go up in a cost of living crisis? So, to summarize, inflation in Australia still a big problem. Interest rates too low, been way too low for too long, and of course the 1 year bond yield is trading at 4.2% today, with the RBA rate at 3.85%. In my video last night, I talked about how this is a sign. This is the market pricing in what the RBA is going to do. People who are loaning the Australian government money for 1 year, they want 4.2%. They don't want 3.85% because they know within the next year, right, well, they're based on current data, they're expecting interest rates to go up. So based on this data today, if the RBA is acting responsibly, they will be raising interest rates 2 more times this year. And at some point, I think they're going to have to stop because we've got a real estate mega hyper bubble, and our entire economy is all about shuffling around the most expensive real estate on the planet. So I think at some point, they'll cave and cut. But for the time being, let's go off the data that we have in the market. And thank you for listening. I hope that this gave you somewhat of a picture that, as I've been saying for years, the inflation problem was never solved. It's not solved. It's a massive problem. And the government and the Reserve Bank of Australia, which I see as one big overall entity, they have kicked off the next big wave of inflation. And if you think 2022 was bad, just give it a couple of years and see all the stupid things that government is doing. And as long as they keep collecting tax revenue and spending, and accumulating debt, this problem will continue to get worse. Thank you for listening, and enjoy the rest of your day, evening, week. Talk soon.